That personally has me worried, and let me tell you why. So this is one of the four most overvalued stock markets in history, depending upon which valuation metrics you look at, 1929, 1999, 2007, and today. There's been over 1.4 trillion in share buybacks from large corporations with artificially cheap debt to goose earnings higher. These companies are not growing revenues. They're not necessarily creating a lot of new products and services. This is straight up financial engineering. The other reason that worries me about Dow 23,000, Dave, is because out of the S&P 500, now obviously I'm going to another stock market index, but all these general stock market indices are all doing well, is that the S&P 500, 90%, Dave, of the S&P 500, 90% of those companies are below 200-day moving averages and in bear market territory, meaning that they have bombed revenues and earnings. So only about 10% of all the S&P 500, that is what is dragging these indices higher. So those mostly are your FANG stocks, your Facebooks, your Apples, your Amazons, your Netflixes, your Googles. And so what has happened, Dave, is a lot of trend traders, a lot of passive index fund investors have indiscriminately bought the stocks that were already going up for whatever reason, whether that's intervention from a central bank, intervention from one of the different plunge protection teams. There's a number of them, your exchange stabilization fund, who else? And they're just buying whatever's already going up. There's not a lot of discrimination here in terms of, looking at different balance sheets and whether or not these things are sustainable. These things are going up because a lot of extra money, especially from retail crowd, is, well, I haven't made money in gold or silver. I haven't made money in other assets and investment classes. I'm going to keep putting money into my stock index fund, general stock index fund, and these things are indiscriminately buying those things up. You also have a lot of other stock markets, Dave, besides the U.S., are up 10 or 15% easily this year as well. So Japan's stock market is up the most it's been in 20 years. Now, it's still not anywhere near the levels it was in the Japan bubble about 30 years ago, but it is at 20-year highs. And a lot of that is because not only has there been enormous central bank intervention with well over 18 trillion in money and credit created by central banks, but also because the Japanese central bank has been buying up stocks and ETFs like crazy. And they're one of the largest owners of stocks and ETFs in the entire country. So central banks have distorted all of these major markets, stocks, bonds, and real estate. And let me keep naming examples of how crazily distorted everything is. Basically, Dave, The Economist magazine put out a title on their magazine last week, everything in a bull market. And so we're at a stage here now where with the central bank intervention that I mentioned the stock markets and everything is up. We have balance sheets of the European Central Bank and the Bank of Japan are now larger than the Federal Reserves, which is mind-boggling. All this has occurred in just the last couple of years. We had $300 billion a month in QE. The bond markets in Europe are so insane at this point, Dave, because the European Central Bank, their balance sheet is now over $4.7 trillion, which is larger than the Federal Reserve's. We have European junk debt. And normally with junk debt, Dave, it has high yields, which is pricing and risk of bankruptcy. We have European junk bonds, which have lower yields than U.S. Treasuries on the yield curve. Okay. That means that the market, and I think this is totally ridiculous, mind-bogglingly stupid, that the market expects that European junk debt is less risky than U.S. Treasuries. And that is how distorted central banks have caused things. And then the additional ripple effects that hedge funds and investment banks and other institutional traders have decided to do in addition to the central bank intervention. So we have bond markets like that, which are crazy. And the other thing is the real estate market. We have the Dodd-Frank regulations. They were trying to stop investment banks from doing as much stock trading and other derivatives trading. Instead, what they have is they piled a lot of extra money into commercial real estate investments in the U.S. And in a lot of cities, Dave, in the United States, it's basically as if the 2007 and 8 financial crisis never even happened. We have property values up to those levels or higher in San Francisco and Washington, D.C. Here in Washington, D.C., there is nonstop construction of luxury hotels here in downtown D.C. and of luxury condos and luxury single family homes and townhouses. And they are building these things 45 minutes or an hour away, based on all this cheap oil that was with the shale debt, which is another bubble. And so I could go on and on naming all the different bubbles in stocks, bonds, and real estate. And basically everything except for gold and silver, I think just about everything is in an enormous bubble. And the other major bubble, which I'm not really hearing about, is China. So on the People's Bank of China's own website, Dave, and this is mind-boggling. I saw a video about this from David Quinteri of the Money GPS, and also hedge fund manager Kyle Bass has recently talked about this as well. On the People's Bank of China's own website, they list their balance sheet publicly. And this is probably an understatement. They list on their balance sheet $220 trillion RMB of liabilities. Okay. Now they also have assets, but everything's leveraged. There is an enormous, enormous credit bubble that has exploded in China in just the last, basically since the 2008 financial crisis. They did stimulus. They have shadow banking system problems. China, there's a lot of gold bugs and alt media people out there that are like, China's going to want fully gold back world reserve currency. Maybe a very, very long time in the future, they will plan on something like that. But there's no way in the near future they can do anything like that. China is going to have to do in the near future, a couple of years from now, maybe even sooner, enormous bailouts, and enormous currency devaluations. Enormous. So when you convert to, for perspective here for your listeners who are not familiar with foreign exchange rates, 220 trillion RMB is about 40 trillion US dollars. So this, I've said earlier in the interview that there was around 18 trillion that central banks have publicly disclosed in money and credit. It's actually a lot larger than 18 trillion when you add in China, when you add in the currency swaps. So basically, Dave, if I could summarize what I think has happened since the 2008 financial crisis, nothing was really solved. Everything was papered over with artificially cheap money and credit. Old credit bubbles in the economy were reflated. New ones were created. Asset bubbles, new ones were created. Old ones were reflated. And now at this point, because the central banks have done this, we have a lot of unintended consequences. And a lot of the problems, Dave, prior to the 2008 financial crisis were not trillion-dollar problems. Now, Dave, there is a lot of new problems that are $1 trillion or more. So, and one of those additional problems is highlighted by hedge fund manager Christopher Cole at Artemis Capital. And I think this, normally in the past, when markets were nowhere near as distorted, we had the volatility index exchange that was a good fear gauge of whether or not markets were going to crash, whether there was going to be a correction. Now, Dave, the VIX has been basically stuck below 10. There was a brief spike when North Korea launched a missile, and then it was right back down. According to Christopher Cole's research, and his hedge fund has a couple $100 million assets under management, all he does is trade volatility, and he has white papers out about this, and there's a lot of research that he's been putting out in interviews he's been doing in the public. There's one on Real Vision TV, and he's been doing newspaper article interviews as well. And he says that because of the central banker activity, a lot of hedge funds, a lot of investment banks had basically thought that the central bankers are not going to allow the stock markets to crash. So your stock market indices like the Dow, the S&P 500, not going to allow the VIX to spike because there is normal intervention, in my opinion, with the Exchange Stabilization Fund and other plunge protection teams shorting the VIX. But this trade has been piggybacked. And basically now, according to his research, he says there is over $60 billion exposure in direct trades of managed money on the VIX and other volatility, short volatility trades. And he says, and this is the kicker here, and this is getting into those $1 trillion or more problems now. He says the short volatility trade now is over $1.5 trillion with leverage, which would put it there basically larger than AIG. So I don't know who the counterparties are who are on the other ends of these leverage trades. But there's a lot of counterparty risk on these trades because who has the collateral for $1.5 trillion or more in losses if you're letting hedge funds lever and do these short volatility trades? So hedge funds have caused unintended consequences. And one of the major things I think a lot of people in the mainstream financial media are not talking about that they should be, that a lot of hedge fund managers and people are talking about below the surface, is this leverage short volatility trade, which is occurring not only on the VIX, but also on other major stock market indices. So basically this everything bubble has exploded now to basically everything except gold and silver. The subprime auto loan market, Dave, in less than 10 years, initially around 2009, there was only about $2.5 billion a year in the United States on subprime auto loans. The auto companies were, rationally common sense. You don't want to give out loans to people who can't, make the payments, who don't have reliable income, who don't have assets, basically ninja loans, no income, no job, no assets. And so, but guess how much subprime auto loans have exploded in less than a decade?
How much?
We are up tenfold. So it's gone from $2.5 billion per year in subprime auto loans in 2009, in less than a decade, $25 billion a year. And that is because we have a lot of basically zombie auto companies that need to keep the share price up, that are beholden to unions as well, that basically, rationally, they shouldn't have markets. They should cut back on car production, but instead they keep churning out the cars and dumping them to the dealerships, because that's this incestuous channel stuffing relationship that we have with. So there's going to be a problem there in the near future. I think Hurricane Harvey and the other hurricanes like Irma have maybe caused a temporary reprieve for the car companies, but the car companies were looking at a day of reckoning prior to Hurricane Harvey and all those cars needing replacement, because there was too many new cars from last year that had not been sold, and they were already starting to retool their factories and produce new cars when the ones prior to last year hadn't sold. And then there's a glut of used cars as well.
So from everything that you said, basically what has happened since 2008 is they've taken the economy and just created all these different bubbles in all these different areas. They inflated everything, and we're exactly where we were back in 2008, except we have a lot more debt, we have a lot more problems, and the whole economy, as we can see in retail, in department stores, in chain stores, and in every manufacturing, it is all just falling apart at the same exact time. Now,
exactly.
Now,
exactly. Add to your points there. According to the government's own numbers, when they calculate GDP, about 44% of the real economy in the United States is car sales, restaurants, and retail. And so I don't know if you remember this, but go back for your listeners who don't remember this or are not familiar, just waking up now, just got red pilled. Go back and watch the speeches that Obama and Ben Bernanke gave right after the 2008 financial crisis, talking about green shoots and the recovery in the economy. They're talking relentlessly about how well restaurants and retail were doing. And so we do have some, more entrepreneurial small chain restaurants that are starting to open up locations, but that does not offset the larger chain restaurants that are doing absolutely horrible and the retail stores that are closing like crazy. And you cannot say that Amazon is destroying all the retail business. I think the main thing is that people just don't have the discretionary income to go out to eat as often as they did and to go shopping as often as they used to in the past. And I think the thing that confirms this with the people are saying, oh, it's Amazon that's destroying all the retailers. The other thing that shows me that discretionary income is not doing well at all is the movie theater business. So the movie theater business is down. Sales are down 30% for movie sales since 2011. So there are movies that still make money, Dave, but overall the industry is down 30%. And, DVD sales are basically have totally evaporated in the last 10 or 15 years. So you can't say that Netflix has totally destroyed the business. I think a lot of it is that the average American consumer, middle class or a little bit below middle class, their standard of living is being destroyed with inflation and taxes that is really not being reported. And unfortunately, I think the stagflation is going to get a lot worse before it gets better.
Now, you mentioned stagflation, but before we get to that, from everything that you've been saying, I mean, back in 2008, we had a credit crisis. Are we heading back to that same credit problem that we had back in 2008?
I think there's going to have to be some type of reset in the near future. So we've heard, the IMF warning about this for a couple of years now. The World Bank's been warning about this. The Bank of International Settlements has warned about this. So the question is whether or not the globalists, the economic and political elites in power are going to get basically a mulligan, to use a golf analogy. They're going to get whether the people, the citizens, middle class or mostly middle class people are the ones the angriest and poor. but whether or not they're going to hold the people in power accountable to the fire. The problem is, Dave, in the United States, we do not have rule of law anymore. So there are a lot of people, Democrats and Republicans, although a lot of the people in D.C., if you come here and live here, you talk to a lot of people who work in these government agencies, especially the Department of Justice, more than 90% of them are hardcore Democrats. A lot of them actually are Marxists. But anyways, though, there are a lot of people here committing felonies, committing treason, committing crimes. They're letting billionaires, banksters, they're letting corporate CEOs, they're letting elite level politicians get away with, robbing, cheating, corruption, fraud, abuse. I think that's the definite. There should be a lot more whistleblowers, but people are scared to come forward because they're worried about how whistleblowers are being treated. So until that gets fixed, I really do worry for this country. I think there's, unfortunately, with so much fake news from the mainstream media, and there's still a good amount of people who actually believe it, the country is becoming more and more ideologically divided. And, we do have a lot of violence at a lot of these free speech rallies. We have a conservative Jew like Ben Shapiro. And here he is, he's going to Cal Berkeley to speak. And they're charging him $15,000 for security. The university supposedly spent $600,000 on him for security just to speak. And we have people, he's a nice, calm guy, wears a yarmulke in public everywhere he goes. And we have people screaming and chanting in front of him with weapons, holding up signs that he's a white supremacist Nazi. So if you're a libertarian and you see, I think libertarians, unfortunately, Dave, are going to be caught in the middle of all this, that the United States is basically headed towards a physical, I hope I'm wrong about this, by the way, but it looks increasingly more likely that the United States is heading towards a violent, physical, ideological civil war. So we already have screaming in words. Social media is just absolutely horrible. People are trying to dox each other and get each other fired over comments on social media or the internet. It's getting really ridiculous. Some of it's honest and justified, the comments, but people are like the NRA lady, Dana Loesch, and she's a proponent example. She's a proponent of the Second Amendment, which is in our Constitution. But here we have people who are going on the internet trying to find out where her home address is whenever she moves, and posting it so people can protest out in front of her lawn. I mean, things are just getting ridiculous at this point. So the new system, the bottom line is we have to wake up as many people as possible and get them to realize what is happening. Otherwise, the economic and political elites, whether that's, the people in the Bank of International Settlements, the IMF, the World Bank, the Exchange Stabilization Fund, the other central bankers, the other globalist politicians, they want to redo. So basically, if there is they either want to continue the same system and keep on printing money and credit, pretend there's no inflation, say the economy is doing well, let the asset prices rise, which is basically a crack-a-boom. Von Mises style crack-a-boom, because of the dislocation between asset prices and reality, the reality of the real economy, versus the people who actually see, hey, I'm not getting that full-time job, my discretionary income's declining, I don't own that many asset prices. The average guy in Main Street maybe has a small 401k, maybe owns their own house. So they haven't participated. What the central bankers have actually done, and the other economic and political elites, and I'm not sure if they planned on doing this or not, but, they talked about the wealth effect, Ben Bernanke was, and Greenspan did prior to him, talked about the wealth effect and how that would get consumers to spend. That's not what's happened. They've actually created, and this is not capitalism, this is not free markets, this is pure cronyism, central bank intervention. Central banking has nothing to do with free markets or capitalism. The central bankers have caused the largest wealth disparity in history, basically. So the major question and the $1 trillion question, Dave, is whether or not regular citizens, people on Main Street, voters are going to let the economic and political elites in power who ruined the last system, who basically ruined the system and have papered over everything, whether or not they can, whether or not they will get a continuation of the status quo or a new system that is similar to the old system, which is basically what this SDR that is being proposed. The SDR would not be that much different than the current system we have, because the US dollar in SDR currency basket would still be the largest holding.
So do you think that the cryptocurrencies fit into this reset, this redo? Are the central banks, I know the central banks are working on their own crypto type of market, and I know Christine Lagarde was out there talking about Bitcoin, and maybe this is something that they can look into. What is your take on the crypto market?
So if you read Satoshi Nakamoto's white paper, I think he has a good understanding, good solid understanding of Austrian school economics. I really believe he was a libertarian, and he wanted to give people the option to protect their wealth and their savings with cryptocurrency. So he thought the potential was there for it to hurt central bankers. But what happens with a lot of technology, Dave, if you go back through history, is that governments will always, whether it's a weapon or anything else, will always look for a way to hijack a piece of technology and use it for nefarious purposes. So I don't believe that Satoshi or whoever he or she is, maybe it's more than one person, I don't believe that they were NSA or CIA, because I believe, the work that was built on with Zcash, with eGold and Zcash, those guys went to prison trying to do something similar to what Satoshi did. So they're willing to stand up for their values. And then the government, of course, said, you're helping drug dealers and criminals and drug cartel people. And so I think that governments are trying to hijack this. And we're seeing this now with Putin, how he just approved crypto ruble. I was at a DC blockchain summit conference in Washington, D.C. in March. And I heard there that the government of Canada and also India are planning on accelerating basically a digital cashless economy. So basically, Canada already has this to a large extent where a lot of Canadians don't even use cash to pay for purchases. But the Canadians are already looking at basically having their own fully digital currency with some type of blockchain. So everything could be tracked and taxed, and basically cash would be outlawed. India has tried a demonetization scheme. It didn't really work. They are trying to digitize people with a basically all-in-one type of ID system. So India is working on this as well. Russia has talked about that. I think the new story just dropped that China, the People's Bank of China, is testing out an algorithm for a blockchain for some type of digital RMB. So I don't know how quickly all these things are going to be implemented. But, obviously I hate legal tender. As a libertarian, I hate legal tender laws. I think they're, morally bankrupt, and they hurt people financially as well. And so basically this would be like a legal tender law on steroids where, you'd be, especially in countries like Europe, where I believe more than, according to their own government statistics, that in the European Union, more than 40% of their economy is off the books. So is underground dark economy where people pay cash and don't put the cash in the bank account. So governments this would really help them on the tax revenues to track and tax every transaction. If you care about freedom, this would not be good at all. But I don't think they can destroy Bitcoin. So I don't think governments can destroy Bitcoin. But what they're going to do, because blockchains are open source, Dave, is they can take the technology behind Bitcoin and they can use it for what I would call nefarious purposes. So I think, Bitcoin, they can try to, shut down individual exchanges. Like in China, they can try to ban initial coin offerings. They can try to tax you extra on your Bitcoin holdings. So if Bitcoin does go to $100,000 or $1 million, or what some of those crazy predictions that John McAfee and others have said in a short amount of time, if it does go there, they could put a windfall profits tax on it. They can't shut down the Bitcoin blockchain itself without, shutting down the internet, and there's not supercomputers enough to destroy it. So I think it is going to be attempted for nefarious purposes, but hopefully, the free market, whatever's left of the free market, because in these cryptocurrencies, altcoins, Bitcoin, and initial coin offerings, this is the Wild West. This is what we have as a free market. So I would prefer not to see government regulation, but I would warn your listeners to avoid almost all initial coin offerings. There already is an enormous amount of fraud. I'm getting like spam emails, a couple of them a day, that are just like obvious frauds.
So you mentioned the SDR, and that's at a high level for this reset redo. What about at the lower level? Is it still going to be the US dollar, or are they going to be changing that around?
I don't think anyone knows at this point. So there's a number of options out there. So let's speak in probabilities. So there's been other experts that have mentioned that they could just reissue a new dollar. They could reissue a new dollar entirely, and that would piss off a lot of people who are already holding dollars. They could have a couple different types of dollars, which would be kind of similar to Bretton Woods, except there would be no gold backing. Because remember, with Bretton Woods, for international trade settlement, you could trade in your dollars for gold. But if you were an American citizen after FDR removed gold backing from the dollar and banned U.S. citizens from owning any bullion, you were allowed to own, I believe, numismatics and also gold jewelry, but that was it. And so it would be similar to that, except no gold backing. So at this point, Dave, it's not just, okay, so there's experts out there like Peter Schiff, and I think Peter Schiff's a brilliant guy, but I don't agree with him on this. Peter Schiff is saying the dollar is going to collapse, the dollar is going to be hurt the most. The U.S. has an enormously large military. The U.S. still has one of the best economies out there. Every other country, Dave, is trying to destroy their own currency as well. You have Japan trying to devalue their own currency. You have China who's going to have to devalue their own currency. You have the European Central Bank who wants to devalue their own currency. We mentioned earlier in this interview how much their money and credit has been created out of thin air to explode, to devalue their own currency and buy assets. So what's the U.S. dollar going to collapse against? Maybe the U.S. dollar in terms of your own purchasing power is going to collapse. But if they're manipulating gold and silver, we have a market now, Dave. I love gold and silver, but we have a market now where Bitcoin goes up, a lot, and gold goes up $30 and it's knocked right back down. Or silver goes up 50 cents or $1 in a couple weeks and then it's knocked right back down. And, I think a lot of, I want to put this point out there because I haven't heard a lot of experts talking about this. I think one of the major ways that the paper silver price is manipulated is with the copper price. The manipulators are very sophisticated, very smart people, the bullion banks, the traders, the investment banks, the people that are involved in this manipulation. And so if the copper price crashes and you move it back up, there's a lot of silver byproduct that these base metal miners do not care about, that they will hedge, that they will, sell at almost whatever price to a bullion bank for to meet their obligations. So and this, in my opinion, there was a short squeeze in the copper market, but also I think the copper price was moved back up in an enormous rally to keep a lot of base metal silver byproduct on the market. And if you look at the total silver market, Dave, about 2/3, anywhere between 2/3 and 70% of all the annual global silver supply is from base metal byproducts. So that is the main silver supply. So if I'm not a manipulator, but let's do a hypothetical and put yourself in the shoes of a criminal, bankster, central banker, manipulator. So the supply you really care about is not necessarily the primary silver miners, although they're about 30% of the market annual silver supply. The main supply you care about then to keep this paper Ponzi going, where you still have to deliver the physical metal, but you have to cap the paper price. The main thing you care about then is the base metal byproduct. So if you can keep the copper price and some of the other base metal prices high enough to where the base metal miners will either bring on new mines with more silver supply, or they will not shut down a mine that's either marginal or uneconomic because the base metal price fell off the cliff, then you can keep the silver manipulated. So I think that's why we're having a divergence between copper and silver. A lot of people in the bullion community don't agree with me on this, but from just seeing the market for years and looking at the global economy, there should not be the price movements in base metals and copper. China pulled more than 4 decades forward of demand for copper, iron ore, base metals that really is not sustainable. And so there's a ton of marginal base metal mines that are online already that really should have been shut down. And the growth for a lot of base metals is basically China makes up more than 40% of all base metal demand. So copper, steel, iron ore, etc. China is the market. And so I don't think it's sustainable for that. Now, China has the Silk Road they want to build, and they want to build out some other additional infrastructure, but they've already built out a lot of it. So to say that, so I think that's what's been happening is that, when the silver market does get tight, there's a base metal rally to keep the silver supply, and that's how they can keep the paper silver price in check. But it's not sustainable, though, because eventually the primary gold and silver miners, they can keep doing this for a little while longer, but the price is going to have to be allowed to go higher at some point. And so I don't know if there's going to be a huge breakout in the near future, but we're going to be looking at, for sure, 1,400 to 1,500 gold and 25 to 30 silver in the next couple of years, for sure. because otherwise then there's going to be a lot of supply that's not going to be able to be replaced. And so the gold mining industry, since 2011, the paper bear market started, Dave, has been an unmitigated disaster. To give your listeners perspective, according to hedge fund manager John Paulson, who's a billionaire, but he also has a gold fund, and so he's been paying closer attention to this market than some other investors. He says over 85 billion with a B in write-offs have been done by gold mining companies. That's on bad investments and bad mergers and acquisitions, bad deals. Those were gold mines and sometimes even copper mines that were bought that are not economic at current prices, that maybe those mines cannot be built until 1400, 1500, maybe even 1600 or higher gold prices. So something is going to have to give soon. Either that or the manipulators, Dave, maybe they're going to just totally collapse demand. Now, demand for physical metal in China and India and from the Russian central bank for gold is still extremely strong. But physical demand for gold and silver, especially retail investors, for physical gold, silver, and mining shares, it's totally collapsed. And I think there's an argument to be made, Dave, that the cryptocurrency total market cap of cryptocurrencies is over $160 billion. That's about what the sales would have been for 1 year for all the physical gold, silver, and mining shares. And so, basically cryptocurrency demand has just about replaced Western demand for physical silver, and mining shares. So something has to give at this point. A lot of these markets are not sustainable. And, if you own, I've said this for well over a year on your channel, if you're not a sophisticated investor, you're not a hedge fund guy, you don't want to be investing and trading the markets, picking out a lot of different stocks, making volatility trades or hedged trades or anything like this, betting on shorts or longs. If you just want to be a little bit diversified investor, you hold some US dollars in case there's a stock market crash and you have some cheap assets to buy. Maybe there's a rental property you wanted to buy for cash flow that goes on sale at a discount. You hold US dollars for cash for opportunity. You hold physical gold and silver, and you hold some Bitcoin. So if you don't want to be sophisticated, you can just stick to those four things, and I think you're going to be all right in this environment.
Jason, just to wrap all this up here, you mentioned a stock market crash. Do you think there's still one coming? Do you still think the stock market's going to come down? Do you still think the economy is going to come down?
I think at some point, because they don't want Trump to get reelected, I think, the deep state, the economic and political elites will allow a brief stock market crash, maybe only 6 months, probably less than 12 months. Because Donald Trump is taking credit for Dow 22,000, Dow 23,000. He's claiming he's creating all these jobs, which if you actually look with the Carrier and some of the other plants, there's either, enormous amounts of subsidies that the state is giving, or they're not really, the jobs are not really being saved. So it's mostly just a press release, PR puff piece. He's only creating part-time jobs. He's not creating an enormous amount of full-time jobs yet, like he's creating. And he's owned the stock market rally. And I've criticized Donald Trump about this because, during the election, he had this rhetoric that the stock market's a bubble, the Federal Reserve's manipulating interest rates. I would fire Jenny Yellen. Well, he's done some of his other campaign promises, which I may or may not agree with. I didn't vote for him. But, I think him with the rhetoric he had during the campaign and now his actions, I think, he set himself up now to take the blame, to be the bag holder for this. And then when the economy does go bad, they can blame it on him. And either that would hurt the Republicans in the 2018 congressional elections, and the Democrats are hoping that would help them gain more seats back in the Senate and the House, and then also prevent Trump from getting re-election. Obviously, the Democrats, Dave, would love to impeach Trump, but it's proving to be a lot more difficult than the mainstream media, the deep state, and the Democrats thought it would to get him out of there.
All right, Jason, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Sure. I just want to get it out there that I am looking for a new business partner or partners. So if you're interested, you can email me at wallstreetformainstreet@gmail, WALLSTFORMAINST@gmail. I'm also looking for potentially talented, undiscovered new guest hosts who can come in and maybe do 1 or 2 podcast interviews a month, giving up-and-comers or people who think that that their work hasn't found the audience that it deserves. So if you want, you can email me at the same email address if you're interested in that. I'm looking to expand my coverage to more potential technology, maybe a different perspective on cryptocurrencies, expand my coverage there as well. So you can do that. My YouTube channel has over 3 million views. It should have a lot more than that. And it's almost 20,000 subscribers. It should be well over 20,000 subscribers. But with the YouTube censorship, Dave, they basically destroyed me financially in order to earn a living from the YouTube channel. So I am looking at the near future of potentially moving more and more of my content away from YouTube.
Jason, once again, thank you very much for being on the spotlight. I really appreciate it. Thank you very much.
You're welcome, and keep up the good work and red pilling more people.
You too.